Hello and welcome to the Business Standard Morning Show. My name is Swapnil Joglikar. Let's take a look at the stories for the day. Come September, and domestic airlines will have a free hand to decide fares. The government on Wednesday announced it was lifting the cap on airfares after over 2 years. Does it mean that we'll have to shell out more for flight tickets, or will it lead to a price war? Let's find out in the next segment.
Have a domestic vacation planned in the coming months? Or are you planning to fly back home during the festive season? If yes, then this news may interest you. Starting 31st of August, the Civil Aviation Ministry will remove price caps for the domestic aviation sector. This will give airlines flexibility on passenger fares. Under normal circumstances, airlines would be broadly expected to continue with current levels of fares despite the government deciding to remove domestic fare caps. This is mainly on account of costlier fuel. However, that could change based on whether airlines maintain pricing discipline or not. Airline executives have also told Business Standard that low demand routes, flights with poor loads, and new routes could see discounts. Caps on fares and capacity were introduced in May 2020 as air travel resumed after the nationwide COVID-19 lockdown, while the government allowed 100% capacity deployment in October 2021, it continued with the pricing regulation. Under the current policy, the government has been setting minimum and maximum fares for domestic flights that are applicable for up to a period of 15 days from the booking date on a rolling basis. For bookings beyond 15 days, airlines have been free to set their own fares. Going ahead, capacity addition, the demand-supply situation, and fuel prices could determine pricing. How much you end up spending could also depend on which route you're flying. Aloke Bajpai, the co-founder and group CEO of ixigo, told Business Standard that airfares should gradually decline on routes with softer demand. Basically, customers can enjoy lower pricing on sectors or routes with comparatively low flight loads. However, another travel agency company executive believes that select flight routes, for instance, between Indian metros, were likely to see a surge in pricing. When you are traveling also matters. The announcement has come when traffic is lean. One financial daily reported that airline executives believe that a fare war could erupt. Ticket prices will decline if that happens. According to the report, airline executives see airfares falling at least till the end of September due to lower traffic. They do expect airlines to maintain pricing discipline in the festive season that starts from October. However, it is possible that airlines that urgently need liquidity might undercut prices even then. According to data provided by travel portal ixigo, for tickets purchased about 2 weeks in advance, the average one-way fares on some of the top domestic routes have decreased by as much as 31%. For example, a Delhi to Mumbai ticket, which cost 7,587 rupees a month ago, was down 24% to 5,801 rupees in the second week of August. Similarly, ticket prices on the Delhi-Goa route were down 20%, and Mumbai-Chennai route fell almost 15%. But the decline came from a high base. It was driven by airlines and online travel aggregators trying to cash in on the long Independence Day weekend. The fares in July were 25 to 30% higher compared to January this year.
In the near term, we see a 10 to 15% correction downwards in airfares. And as this progresses, the natural correction where it will settle at is at 20 to 30% below current levels. So in our view, a price war is inevitable because at some point, one of the weaker airlines, for purposes of cash flow, is going to engage in discounting. The thinking is, even if I'm at a loss, at least I can get in some cash because an airline seat is a perishable commodity. Once that aircraft takes off, that cash flow gone is lost forever. So it's a matter of when and not if, uh, regarding a fare war, and it will most likely be one of the weaker airlines that gets into it. If a stronger airline does it, that would be a strategy, a loss leadership strategy, where they're bleeding a weaker competitor out of the market. In the near term, unless a competitor starts a fare war, the fare levels will remain fairly high. But post the holiday season, which is post Diwali, you will see the fare levels returning to the unbelievable deals that you could get, 1,500 rupee ticket or a 2,000 rupee ticket.
However, given the high base we spoke of earlier, the projected downwards correction won't bring considerable relief immediately. As Satyendra Pandey said, airfares will still be high in the near term. Meanwhile, the doubling of jet fuel prices and a weaker rupee against the dollar have increased the input cost for airlines. Akasa Air has also started operation, which will only increase competition going ahead.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4,000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4,000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
More news from the aviation sector, as some cash-strapped domestic airlines have been cutting corners to stay afloat, even at the cost of safety. The recent spurt in technical snags and emergency landings have shown the spotlight on it and forced the airline regulator DGCA to step in. So what is plaguing the aircraft maintenance sector? Let's do a deep dive with this next report.
A slight turbulence in any aircraft, as it is thousands of feet above the ground, makes flyers edgy and unsettled. And what if there is a technical snag? Hundreds of flyers in a snag-hit Hyderabad-bound flight recently heaved a sigh of relief after their plane landed in Karachi. Under normal circumstances, they wouldn't have been that happy. Against the backdrop of a spate of emergency landings this year, the government told the Parliament on August 1st that airlines have reported 478 technical snags between July 1st, 2021 and June 30th this year. The recent incidents also forced the Directorate General of Civil Aviation or DGCA to direct SpiceJet to reduce its flights by half for 8 weeks. The airline has reported a maximum number of snags in the last few months. So what do these rising incidents of technical snags say? Are airlines cutting corners to stay afloat and are compromising on safety? The DGCA report suggests so. The aviation regulator found that airlines were deploying staff with Category A license as the final authorities in certifying planes. On July 18th, it issued an order that only aircraft maintenance engineers or AMEs with Category B and B2 licenses should do that job as they are more qualified and trained. Category A licensed engineers or technicians carry out minor line maintenance tasks based on their knowledge and experience, while Category B1 and B2 license holders get specific type-rated training by airlines. Category B AME license holders are also approved to do major maintenance works, including repair, overhauling of mechanical components of heavy aircraft. Airlines usually determine the number of type-rated engineers required at any station.
The thing is that airlines are training the adequate engineers to meet their requirement. I just very clearly mentioned that it is basically a commercial issue for them. If they have to carry out the train the extra person for the training, so they have to take out them for a particular for a time of about 1.5 months from their schedule, then give them the training, so they do not disturb that kind of thing also. So what they are doing, they are training the persons adequate to meet their requirement. The question is that about the MRO requirement. Now they are not training from with the point of view that they have to establish the MRO. They are not right now interested in establishing an MRO. Okay, so the reference was on that purpose. Okay, that they are having their manpower just to make their requirement, just to meet their requirement, and not adequate to establish the MRO. So this major maintenance activities, they are depending on the outside, like Singapore, Sri Lanka, and other places where the MROs are established.
Experts say the aviation regulator had adopted the European Union Safety Agency model for the aircraft maintenance staff that allowed airlines to issue Category A license to technicians. As a convenient measure and to conserve cash, the airlines started utilizing Category A license holders at the transit base. Clearly, there is a need for more well-trained manpower with Category B1 or B2 licenses. The DGCA says it issues enough licenses. Between 2014 and 2022, it has issued 7,232 AME licenses. While the aircraft maintenance engineers with DGCA approved licenses get paid relatively well in line with the industry norms, the technicians at the bottom rank of the hierarchy argue that they get very less amount when they enter the industry as freshers. The pay scale varies from airline to airline, but it is usually in the range of 14,000 rupees to 19,000 rupees per month for the technicians, they say. As they move up the ranks, the staff get paid over 20,000 rupees per month. The trainee technicians are non-certified and don't have DGCA approved licenses. Indigo has about 2,000 non-certified technicians on its payroll. Currently, there are over 50 AME institutes approved by the DGCA. Experts say AME institutes only equip students with basic knowledge that is needed to get licenses. Airline executives have recently told Business Standard that high jet fuel prices and nascent recovery from pandemic have been holding them back from increasing the budget towards all this. Globally too, technicians get paid less. According to an aviation technician education control survey in the US, the average entry-level hourly pay for a mechanic was $22.36 in 2021. Aircraft maintenance workers and pilots are demanding higher wages to cope up with high inflation. Recently, German carrier Lufthansa's ground staff, including aircraft mechanics, went on a strike seeking higher pay of at least $358 per month. Apart from the manpower, the DGCA has found that there is an increased trend of minimum equipment list releases of aircraft, which allows the plane to be flown for a specific time period even if there is a minor problem. With new aircraft getting added to airlines' fleet every year, the DGCA must step in and reconsider whether airlines can regulate the well-trained manpower requirements. The airlines also need to resolve its issues with employees to ensure that passengers' safety is not compromised.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Like the airlines, the government too is in a firefighting mode, albeit in a different field. It is trying to bring down inflation and has now directed edible oil suppliers to cut prices by as much as rupees 40 per litre over the past few weeks. As raw material prices continue to remain volatile, will players like Adani Wilmar and Patanjali Foods bear the brunt? Let's find out.
Palm oil prices have been volatile thus far in 2022. After hitting a high of 8,200 Malaysian ringgits per ton within a week of the Ukraine-Russia war, they slipped to a low of 3,600 Malaysian ringgits in July, only to bounce back by around 14% in August. Against the backdrop, companies like Adani Wilmar and Patanjali Foods hiked prices by around 5 to 7% to cope with the rising palm oil prices. As global palm oil prices corrected, the Indian government directed related companies to cut edible oil prices about 40 rupees per litre over the past few weeks to alleviate inflationary pressures.
It takes time for such price changes to trickle down from the manufacturer to the end consumer, especially as the distributors try to chomp down on the margins that expand during this transitionary phase. However, the center has emphasized specifically on the fact that this price cut must transition at the earliest possible, and it needs to be done in the form of also reduced MRPs. Most of these companies can see some pressure in the form of their earnings really contracting. There could be some changes in the cash flow situation of these companies. It could put in a minor dent into the free operating cash flow situation of these companies. However, going ahead, we believe that the margins continue to sustain broadly in the range at which that they operate.
Adani Wilmar's edible oil EBITDA margin weakened by 200 rupees per ton during the June 2022 quarter on the back of inflation and downtrading by consumers. Patanjali Foods' revenue from oils and Vanaspati segment grew a meager 7% over the March quarter. However, easing prices, along with the festive season ahead, are silver linings and should support volume growth in the coming quarters, analysts said. Against this backdrop, Edelweiss Securities suggests holding Adani Wilmar for a target of 743 rupees per share.
Also, players are not taking any steep cut, but they are gradual in cutting prices as they want to take advantage of lower raw material prices to protect margins. So from a long-term perspective, financial of these companies are set to improve and investor can look for accumulating this stock.
Overall, healthy demand outlook due to festive season and expected improvement in rural sentiment is keeping analysts bullish on the sector, at least for now. On Friday, investors will eye the domestic retail inflation data for July. Besides, global cues and other stock-specific action will also sway the indices.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
India will celebrate 75 years of independence this Monday. From WhatsApp profile pictures to balconies to road crossings, tricolors are flying everywhere. But do you know about the rules governing the national flag? Watch our next report to find out.
It was a symbol of dissent during the freedom struggle. And when the colonizers left, it became an emblem of independence. When tagged on a vehicle, it indicates presence of a dignitary inside. When flying half-mast, it suggests that a nation is in mourning. When it is draped around a body, it announces that the nation is paying homage to a hero. A flag gives respect and dignity, and it deserves the same too. The use of the national flag is governed by the Flag Code of India 2002 and Prevention of Insults to National Honour Act 1971. A brief knowledge of the rules governing the use of tricolour will help us use it in a proper way. The Flag Code of India consists of set laws and conventions concerning the use, display, and hoisting of the Indian national flag in the country. Brought in effect on January 26, 2002, the Flag Code is divided into 3 parts and consists of detailed guidelines regarding the hoisting of the flag. It tells how private, public, and government institutions must display the national flag. Polyester or machine-made flags were not permitted earlier, but on December 30th, 2021, the government amended the Flag Code to allow it. So the national flag can now be made in polyester, cotton, wool, silk, or khadi. It can either be woven by hand or by a machine. The Flag Code says that a member of the public, private organization, or educational institute is allowed to hoist the national flag on all days and occasions, ceremonial or otherwise, consistent with the dignity and honor of the flag. A recent amendment made by the government allowed the flags to be hoisted after the sunset too. It wasn't allowed earlier. The national flag shall be of any size but should always be rectangular, with the length to height ratio fixed at 3:2. Only individuals who hold important designations have been granted permission to display the national flag on their vehicles, like the President, Vice President, Governors, Chief Justice of India, Supreme Court judges, Chief Justice of High Courts, judges of High Courts, heads of Indian missions, Chief Ministers of states, etc. National flags made of paper should never be disposed of on the ground after the citizens have waved them. The damaged national flag must be disposed of as a whole in private and can be done by either burning or any other method that would give due regard to its dignity.
I will achieve, I will fly high.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The government has exempted machine-made tricolors from GST now. Earlier, sales of handmade national flags were not in the GST ambit. That's all for today. We'll be back with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.